What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Wanted to talk today about the commercial real estate market and how that is going to affect these small regional banks. As I mentioned in a video earlier this week, almost 70% of commercial loans are held by small regional banks. We're going to get into the articles and get into the stats, but many of those loans are going to be due this next year, within the next 3 years. What does that mean for these small local banks, and how is that going to affect the overall economy and the banking crisis that we're experiencing? Before we get into that, I wanted to just tell a quick story. I bank at a small local bank here in Vermont. I have my money in three different banks, but my primary deposits go into this local bank. And so I went to deposit a check today, which is Saturday, March 25th. And I just did it at the ATM, 24-hour ATM. And usually, you can deposit checks, you can withdraw cash, kind of access your account how you need to. And this was at the actual branch of the bank. I deposited the check, and it said that withdrawing money is temporarily unavailable right now, which I thought was very interesting, especially given all the all the turmoil that's going on. I mean, I don't know if they're worried about a bank run or some sort of banking failure over the weekend where they wouldn't have the cash on hand, or people would be coming to the ATM to withdraw excess amounts of cash. And I know a lot of people who a lot of accounts, when it comes to withdrawing money from ATMs, there's limits on the amount they can withdraw. So as far as how much money they can take out, I don't know. And I don't know if that was just something from my account or if that was everybody's account, but I just thought it was interesting, especially coming from a small local bank here in Vermont. So anyway, on to the story in the commercial real estate market. So I have this article here from Markets Insider, and it says here, commercial real estate is the next shoe to drop for regional banks and the stock market. Now, I made a video about this a couple days ago. This video is from this morning. But I just wanted to further hit this nail on the head because I think it's really huge, right? The commercial real estate market is, the values are getting values have gone down way more than they have in the residential market. And the reason is, I mean, for many reasons. Obviously, office space is in a lot of trouble. Shares of office REITs trading at multi-year lows as this work from home craze has swept the nation. And then when you look at the stats into these commercial real estate products, 450 billion commercial real estate loans are maturing in 2023, and about 60 of them are held by banks. A lot of these banks are local commercial banks. We expect about 21% commercial mortgage-backed securities outstanding office loans to default eventually, which is just crazy. Imply 38 billion in losses for the banking sector. And then here we go. Losses in commercial real estate could be worse this time around than it was during the great financial crisis because the latter was driven by a relatively short-lived recession. Remember, that was a residential real estate-led recession for the most part, while today's dynamics are being driven by work from home trends that show no signs of letting up. So people aren't going back to the office, and so the commercial office loans are in a lot of trouble. But this isn't just commercial real estate or office real estate that's in trouble. It's apartment buildings. Basically, these loans are maturing. Let's see, $450 billion worth are maturing within the next few years, and that's because of how the commercial debt is structured. With residential real estate debt, that's usually structured on a 30-year fixed rate product. But for commercial real estate, it's structured usually on 3, 5, 10-year rate loans. I'm just looking for another. I thought they had something else that said when it was due. I guess not. But anyway, the debt is structured completely differently. And we look at the year-over-year change of commercial real estate debt. This is all banks and small banks. Banks rank, this is from Yahoo Finance, and it's basically the same article, but I thought this chart was really helpful. So the year-over-year change, they've been just all banks are up 13% year over year in commercial real estate loans, and small banks are up almost 20%, 17.4%. Now, Yahoo says here they have a statement talking about, I think it's 1.4 trillion loans are going to be due in the upcoming 5 years. And I just wanted to, yeah, right here. All right, so they say 270 billion commercial loans held by banks are set to expire, 1.4 trillion over the next 5 years, right? So a lot of these commercial loan products are going to need to be either refinanced or just paid back by the borrower to these banks. Now, if the asset's worth less than they took out, or the borrower might not have the ability to refinance, which is going to put a lot of strain on these banks that already are seeing their asset values decrease. And on top of that, the value of the actual commercial product has gone down. The value of these apartment buildings, of these office spaces, of warehouses, other commercial spaces have gone down because rates have gone up, and a lot of this debt is purchased with interest rates and purchased on cap rates, which we don't need to go into it too much. But basically, if the debt to you need to acquire these assets has gone up, then there's less buyers out there who can make the numbers work. The rent, if rent hasn't gone up as much as your monthly mortgage payment has gone up as a result of these higher interest rates, the value of the asset is going to decrease. And then on top of that, if you have been paying attention to the economy, the Federal Reserve, to my videos in this past week, banks are expected to tighten their lending standards because of these bank collapses. So when they say tighten their lending standards, they don't necessarily hold a lot of residential real estate notes. They don't hold a lot of primary residence loans, but they do hold a lot of commercial loans that are non-conforming. Some of them obviously are sold on the secondary market, but a lot of them are just held by these individual banks. So if lending standards tighten up and a lot of these commercial loans are maturing, and you need to refinance and get another loan to essentially keep your property, but lending standards at all banks are tighter, in my mind, that just seems like a snowball effect that's going to spiral, and people are going to have a tough time refinancing out of their products into a new type of debt to continue their ownership. And banks that are forced to default on their borrowers, on their commercial borrowers, are going to have a hard time finding a buyer on the back end to purchase that product because lending standards are tighter. So in my mind, in my opinion, this could be potential trouble, and it's catching on. A lot of people are talking about it now, more people are talking about it than they were a few days ago. And I really think this is something to pay attention to, especially as these small banks are already under pressure. If the commercial real estate that many of these banks own starts to, continues to decrease in value, and people start defaulting on their assets, these small regional banks, small to mid-sized banks, could be in a lot of trouble. Now, one last thing that I wanted to mention, just really quickly, kind of unrelated, but definitely related in some sense, is I'm going to leave this video from Eurodollar University in the description of my video. I would recommend everyone goes out and watches this video. It's titled, "What is the 2008 Trap and How Do We Avoid It?" It's made by Eurodollar University, Jeff Snyder, who's very smart. I love his channel, and what he talks about, he goes back into the Federal Reserve speeches and the political speeches of the 2008 crisis and the earnings reports of these companies leading up into 2008. And what everyone was saying is it's a tight jobs market. Earnings were good at a lot of these companies. The economy is strong. The central planners, the Federal Reserve was yelling that everything's okay, and then all of a sudden the Great Recession happened. The 2008 financial crisis happened. So there's a lot of signs that that bumpy roads are ahead in the economy, even though the Federal Reserve and the government states that everything's okay. It seems like there could be more trouble in the future, and it could be similar to 2008 in that sense, where everyone says it's okay, but there's trouble under the surface. So anyway, Lee Morale, Vermont economic realtor. If you're looking to buy or sell a home here in Vermont, you should do it with somebody you trust. I would be happy to help you, happy to guide you in that sale. Feel free to reach out to me directly. Or if you're looking somewhere else, I'd be happy to find you a great realtor who can, properly advise you in your purchase or sale. Other than that, leave a comment in the description. I love hearing from you folks. Do you think I'm right? Do you think I'm wrong? What do you think is going to happen with commercial real estate and the banking crisis and the small regional banks? Leave a comment. I'll see you in the next video.